According to the Federal Deposit Insurance Corporation, a total of 155 U.S. banks have failed in 2010 alone. Our federal deficit has blown out to a staggering $14.1 trillion as it grows by $5 billion daily. As we continue to fund our own debt and pump money into the system, we will ultimately hit a stage of hyperinflation. And in the end, paper money will be worthless.
Paper, in the end, I believe, is going to burn. All paper. Look back. I mean, gold really has been one of the only safe investments that the general public can get into. My name is Jeff Angelo, and I'm an owner of American Coin and Stamp Company in Clifton, New Jersey. We're dealers in precious metals and rare coins full-time since 1955. We carry a full line of any of the popularly traded gold and silver items and always make a two-way market. Two-way market means we always buy and we always sell.
In the current dwindling economy, a rising trend for people who want to have financial security is an investment in gold. You may have heard the term paper gold. These days, all you need is a laptop and internet connection to buy gold shares with very little commission. Although appealing, these electronic traded funds or bank pools have extensive stipulations, meaning that in any unforeseen event, you might be left with nothing but a piece of paper.
The advantage of dealing physical is that you're taking possession of your own gold. At ACS, or American Coin and Stamp, we maintain a continual working inventory of the gold. So if you were to come in to buy, you're walking away with it and you could do what you wish with it.
So now that we've learned the benefits of investing in actual, physical gold, let's find out about the 3 factors that are involved in buying gold, starting with the price.
Let's say you want to buy retail gold. Essentially, there are 3 variables in there. Price of gold, the premiums, and the commissions. The spot price is a derived price from the futures market. Right here in New York, we have NYMEX, or the COMEX as it's called, the Commodities Exchange. And the price of gold is essentially quoted as a futures price. It's a piece of paper. The best way I can explain it to you is, let's say I'm a jeweler and I get a commission from, say, Macy's to produce 20,000 rings, and I know how much gold is in there. Well, I'm not going to produce these overnight. It's going to take me some time to produce them. Yet the price of gold is quite volatile, so I want to lock in my cost. So what I will do is we'll go either through a commodities broker, or I will somehow buy a futures price of gold that will guarantee delivery at a certain price. So it takes any sort of uncertainty of the price of gold, so I know what my gold will cost me. If that time that comes when the contract expires, if the price of gold is higher, well, I don't have to pay the higher price because I've locked into that price. If it's lower, I can pocket the difference.
That explains what the spot price of gold is. The futures price is always going to be higher than the current price because there are costs involved, such as interest rates and lease rates. What about the premiums?
The second portion to that are the premiums. I talked a little bit before about how the premiums are a little bit out of whack now. But why do they vary, and how they vary from different product to different product?
Should you decide to buy gold, ACS offers a secure way of paying for it. The preferred way is to send money via check or bank wire because there's no reporting and you can safely keep your anonymity. Let's take a look at the commission structure.
In terms of our commission, just to give you an idea, I have what I believe is a very fair and straightforward commission structure. On gold, if you buy 100 ounces of gold for us, I will maintain a 1% spread, meaning that the profit margin is about $9 or give or take per ounce. If somebody comes in and buys just a single ounce of gold, it's really not profitable for a broker to maintain inventory on a volatile investment and have a $9 margin. So we add on 3%.
The final message here is this. We're in the biggest financial crisis since the Great Depression, and things aren't looking towards improvement. In order to secure our financial future, we need to consider the value of gold as an asset.
I will also tell people, I'll tell you how much money I have in the bank. And most people say, well, I don't want to know, it's private. Well, I'll tell you. It's zero. 6 years ago, I took the leap of faith and completely got out of paper assets and put it all into things that I know and trust. A gutsy move, but I've been very happy I've done it. And I will tell you this, I don't buy gold as a get-rich-quick. Not at all. I'm very conservative by nature. I do it to preserve what I have.